We're going into tech earnings this week. We heard from Google last week, and the stock's been down despite a good report. Stephanie, how are you playing tech going to earnings this week?
Yeah, I mean, the names that we own are the names that we would look to be buying if there is any weakness. I like that these stocks are selling off ahead of the report, so the expectations are low. But so names that we own and that we're looking to maybe buy if there's a pullback would be IBM, EMC, and Lam Research. Those are our three favorites. Still like Broadcom a lot. It's just up a lot, so we've got to wait for that to really pull back for us to be buying that one.
So EMC, the valuation's pretty rich there still, so where would you buy this stock?
Well, actually, if you look at ex-VMware and ex-cash, the stock's trading in single-digit multiples on forward numbers. So it's actually quite attractive for double-digit earnings and revenue growth. And I think that, this is a name that it has had a nice run, but they are taking market share from their biggest competitor, Network Appliance, and that is because they've made excellent acquisitions and they have a full suite, full set product set. And I also like the fact that there's margin opportunity at this name. So it's one that I would buy under 25.
Under 25, okay. Yeah. Lam Research, you were buying that last week on some weakness.
Right.
Do you still buy it going into the quarter, or do you wait to get to the report?
It's a pretty full position. I think that at these levels, the stock is very cheap, and the first quarter is going to be trough earnings. So let's get through the bad quarter. We all know it's all for the industry. It's going to be kind of a trough earnings for semi-cap equipment. I like the Novellus acquisition. I like the fact that they have exposure to foundry CapEx budgets, which are going up, and I like the valuation. And I think that after they close the Novellus deal, they're going to get back into the market and buy back stock. So I like it for the long term. I recognize it's not going to be a great quarter, but I think maybe that's priced in at this point.
And as far as downside goes, are there any subsectors of the tech space that you would stay away from during earnings?
Yeah, PCs. I mean, I just think that continues to be the problematic area. And that, kind of brings up a point on Intel. I mean, that stock is up, to kind of new highs. I understand why people own it. It's a nice dividend yield. It's a kind of a boring way to get, tech exposure, if you will. And they are getting into the smartphone market, but I do think that their exposure to PCs is not something that I would want to have exposure to. And that goes for all the PC companies. It goes for, HP and Dell, those kind of names too. And I would actually use any weakness to buy IBM, which has been, over the last couple of years, really working hard at changing from a hardware company into a software services company. So if that stock is weak, I'm a buyer there, particularly under 200.